Today on Fear and Greed, wage growth slows in a positive sign for inflation. WiseTech Global gets hit with a class action over its earning guidance, and Donald Trump announces a Fox News host as head of defence. Plus, plenty on Bitcoin, the ASX, plus some big companies report profits. Welcome to Fear and Greed, daily business news for people who make their own decisions. It's Thursday, the 14th of November, 2024. I'm Adam Lang, and good morning, Sean Aylmer.
Good morning, Adam.
Sean, the main story this morning, public sector wages grew faster than the private sector for the first time in 4 years during September, and that's good news for anyone hoping interest rates will fall sooner rather than later.
And Adam, I reckon that's most of us. Overall salary growth fell to a 2-year low, with the ABS saying wages growth was 3.5% in the year to September, down from 4.1% in June. The public sector came in at 3.7%, the private sector 3.5%. As you said, first time in 4 years that the public sector has grown faster than the private sector. For the quarter, it was 0.8% across public and private. That was actually below expectations slightly. Now, interest rates are certainly slowing the private sector, and wages just aren't rising as much. Much of the growth in employment that we've seen recently is in government-funded sectors, aged care, health, education, those sorts of things. What's really critical about these numbers that came out yesterday is that they're September quarter, and many wages reset on July 1. In fact, about 45% of employees got an increase during the quarter. So the fact that private sector wages growth has slowed so much, good news. Wages are a really big part of keeping prices lower. Put simply, if wages rise, companies tend to pass on the extra costs in higher prices. Hence, we like it if wages don't rise too much unless there's productivity growth with it. Basically, the figures yesterday reflect the cooling economy and a touch weaker than, and the numbers themselves are a touch weaker than expected. The good news really is that wages aren't putting as much pressure on inflation.
Sean, there was also good news on the inflation front from the Commonwealth Bank. Its data suggested that the majority of Stage 3 tax cuts, which commenced on 1 July, were used to pay down debt rather than buy more goods and services.
Yeah, so the bank has about $8.8 billion worth of home loans in trouble, but it was a percentage of its total loan book. That hasn't changed. Borrowers, it seems, are using the tax cuts to pay more off their mortgages, thus keeping loan arrears stable. Retail trade figures from the ABS recently back that argument up, the fact that people are using the money to pay down debt rather than to go out and buy lots of stuff. There has been no great surge in spending as a result of people receiving more money in their pay packets. Again, just like we were talking about before when we were talking about the wages data, this is good news for anyone hoping interest rates will fall. The fear was that people would spend their tax cuts keeping pressure on inflation. That doesn't seem to have happened.
Sean, staying with the Commonwealth Bank, it expects that interest rates will start falling early next year, probably in February.
Although Chief Executive Officer Matt Comyn said it's a finely balanced call. He did say it was a safe bet. Then he said it's a finely balanced call. Who knows? Maybe it could be later.
Hedging his bet.
Hedging his bet. That's actually a better way of putting it. Mr. Comyn said that the growth in the Australian economy remains slow. Inflation is moderating only gradually, and geopolitical tensions ensure there is plenty of uncertainty around. He was providing first quarter results. The Commonwealth Bank made an after-tax profit of $2.5 billion for the 3 months. Home loans are up 4.5%, which was actually above the broader system. So it's outperforming its competitors, at least in terms of volume of home loans. In business loans, Commonwealth Bank has had a big push into that area. They're up 10%. In the end, Commonwealth Bank's share price finished down 0.5% yesterday.
Sean, across the local share market, it tumbled early yesterday, then it recovered somewhat. What was going on?
Well, there was a weaker lead-in from Wall Street, an unwinding of the Trump trade. I'll talk about that in a moment. But things did improve locally, and by the end of the day, the S&P ASX 200 was down 0.75% to 8,193 points. Financials and industrial sold off hard. ANZ went ex-dividend. That finished down more than 4%. Otherwise, the big banks were generally lower. The retailers were lower. So too most of the big miners. Few interesting bits and pieces around yesterday. Newey's share price tumbled 22%, having hit a record high in recent days. Even though the group reiterated its growth target for this financial year, analysts said the sell-off might actually reflect the lack of detail in the ASX announcement. Life 360 share price tumbled 7% after it downgraded revenue forecasts. It was the worst of the top 200. Self Wealth jumped 75% after Bell Financial made a $51 million buyout bid. That's not a top 200 stock, obviously. That's a tiddler. Best of the top 200 was Paladin Energy, which jumped 9%, having fallen 29% on Tuesday.
Sean, immediately after the show, we want everyone to stay listening to The Property Pendulum, our collaboration with Domain on all things property with Alice Stoltz and Michael Thompson.
Yes, I had a sneak listen to it. All about those questions that you dread asking when you're looking at houses. You know, how much is the house going to sell for? What's the price range? What's the best offer they'll accept? All that stuff. Michael and Alice talk about addressing those sorts of questions.
Sean, when I was younger, I was probably a bit coy, but now that I'm more mature, I have no problem asking those questions.
Totally. I absolutely agree. Go in, how much is it going to sell for? Is this the bottom price? Good, right.
Any wiggle room? Come on, surely there's something.
I have worked with you for many years, Adam. You are a very good negotiator, no doubt about it.
We'll be back in a moment with the rest of the day's business news. Sean, the federal opposition will support government proposals to shake up merger laws, which will introduce mandatory notification where companies involved in mergers meet certain monetary thresholds.
It's quite a big change. Jim Chalmers, the federal treasurer, is trying to stop mergers that boost industry concentration, lessen competition, and give dominant players more ability to push up prices. At the moment, the Australian Competition and Consumer Commission runs a voluntary notification regime. Under the new rules, mergers where the Australian turnover of the combined businesses is above $200 million, or either of the businesses has turnover of $50 million, or the company has more than $250 million in revenue globally, bunch of rules there, well, you'll need to seek ACCC approval. It will capture a lot more companies. The ACCC will also be able to request the Treasurer designate sectors of the economy where every deal would require approval regardless of the transaction size. According to the Fin Review, ACCC Chair Gina Cascott-Leap has already singled out supermarkets, liquor stores, pathology and private cancer radiation for special attention.
Sean, opposition leader Peter Dutton has also gone cool on tax cuts for high-income earners. That's interesting.
It seems that way. Peter Dutton yesterday told ABC Radio that tax cuts were good, but the opposition's policy will depend on what money's available and how spending is prioritised. He had been pushing tax cuts for higher-income workers quite aggressively to address bracket creep. Seems to have changed his mind on that one.
The electioneering continues. Sean, tech leader WiseTech Global is facing a class action alleging the group failed to tell investors it was falling short of aggressive earnings targets.
The allegations in the Supreme Court of Victoria say the company has had several opportunities to update guidance in mid-2019 but didn't. WiseTech back then said it was on track for record earnings of around $150 million for the year ending June 2020. Twice it came out and said it was on track to hit guidance, but eventually it revised its earnings to around $123 million. That's quite a drop. It triggered a 27% fall in its share price in one session, a further 12% the next day. As a result, the class action has gotten up and is arguing that the WiseTech Global wasn't totally forthcoming about the information it had. The share price finished down 1% yesterday.
Sean, we've been talking about Aristocrat Leisure this week a bit, and it will pay a higher dividend after announcing a 17% jump in full-year profit.
Yes, that's a normalised profit. The statutory profit was actually down 10%, in part due to the write-downs of its mobile gaming business, which is what we've been talking about in the past couple of days. Overall, Aristocrat Leisure's share price finished up 3% yesterday.
And Sean, moving on to building products, Group James Hardie's share price jumped 6% after it said it expects to deliver better profitability and launched a US $300 million buyback.
The improved outlook comes after a decline in sales and earnings in the September quarter. Net profit was down 23% due to what it said were a challenging demand environment, particularly in Asia and Europe.
Sean, Mineral Resources share price fell 7% yesterday after it mothballed its Bald Hill lithium mine in Western Australia.
More bad news for this company, which is under attack somewhat. The mothballing is effective immediately. 300 staff will be either sacked or redeployed. Closing the mine will preserve cash and the value of Bald Hill's spodumene ore body when prices improve. That's according to the company. Lithium spodumene is fetching about $800 a ton at the moment. That's about 10% of its price 2 years ago. It was $8,000 a ton. Incredible. It suffered a lot more supply from China, also a lot more supply from Africa too. There's also lower demand for EVs. Yesterday, just before we leave Mineral Resources, we know that Chris Ellison, the founding CEO, is going to step down over the next 18 months. There was a bit of speculation around the place yesterday that the boss of Santos, Kevin Gallagher, might replace Chris Ellison at Mineral Resources. Santos came out and said the rumours were fabricated, without foundation and false. I think they're saying they're not true.
Yes. Sean, the Trump trade has taken a breather, with Tesla's share price falling 6% and US equities steady, while Bitcoin has come off a bit.
Yes, just a bit, back under $88,000 a unit. Wall Street, and particularly the share price of Tesla, has jumped post the Trump election. Tesla, until yesterday, was up more than 40% in 5 sessions. The hopes on Wall Street are that Donald Trump enacts big tax cuts for large businesses, helping earnings. Trump administration 1.0 did exactly that. The difference this time around, though, Adam, is that in the year before Trump was elected in 2016, Wall Street went backwards by about 2%. In the year to last Tuesday, Wall Street was up more than 25%. Back in 2016, Wall Street was undervalued. Not so today. We'll have to wait and see about that one. Otherwise, Brent crude's trading around $72 a barrel. Gold continues its slow decline, and an ounce of the precious metal is worth just over $2,600. The Aussie dollar is trading just over 65 US cents.
Sean, President-elect Donald Trump continues to unveil members of his incoming team, and Elon Musk and Vivek Ramaswamy will co-lead a US Department of Government Efficiency.
Musk, we know. Ramaswamy, well, he ran in the Republican primaries, got knocked out pretty early. He's an entrepreneur who previously made a lot of money from a pharmaceutical company. Trump said it will become the Manhattan Project of our time. Now, I thought the Manhattan Project was about building the atomic bomb. I'm not quite sure whether it's a great analogy. Maybe they did it really quickly. Maybe that's kind of the analogy, but I'm not sure.
He's always gone big, hasn't he, our man Trump?
Very big, very big. He said the new department will seek to slash excess regulations, cut wasteful expenditure, and restructure federal agencies. Musk, in a very Trump-esque moment last month, said he could cut $2 trillion from the federal budget. That's more than a third of total spending. Who knows what happens to stuff like Social Security, Medicare for older people, Medicaid for low income, veterans benefits, who knows? The
defense.
There's even more astounding parts of this story. Donald Trump yesterday came out and said he'd nominate Fox News host Pete Hegseth to be his Secretary of Defense. Is he qualified? Well, he is an Army veteran, no government experience whatsoever. He'll be in charge of 3 million military and civilian employees. Pete Hegseth, and mostly because he's a Fox News host. Quite amazing. Former Texas Congressman John Ratcliffe is going to be the director of the CIA. Bit of a firebrand, that one too.
Sean, if you were doing the recruitment for the Trump administration,
yes,
would you take an orthodox approach?
What? I mean...
cast the net wide, I think, is the guidance.
I mean, getting an anchorman, like an anchorman at Fox News to run your Secretary of Defense. Seriously?
Well, we're big fans of the movie Ron Burgundy here.
We are.
So maybe there's some lessons in that.
Maybe. Beyond me.
Sean, moving on to China, Beijing has unveiled its latest stealth fighter, the J-35A, as part of the modernisation of its military.
So there was a 5-minute air show over the past couple of days, according to the Financial Times. China is trying to modernise its military and challenge US dominance in the Asia-Pacific region, especially around Taiwan. Only 2 countries, China and the US, can now produce 2 types of stealth bombers. Great thing about stealth bomber, right, which I can never kind of work out. So they boast about them. You can't detect them by radar. You can't detect them from infrared sensors. You can't see them. You can't see them? How can you not see them?
Pretty big.
Maybe they're slightly camouflaged or something.
Hey, what's that in the sky? Oh,
Yeah.
Ignore that. You can't see it.
I'm
yes,
off.
I can.
Yeah, I know. In fact, there was actually an air show to show it off yesterday. If you couldn't see it, why would you have an air show to show it off? Anyway.
Sean, up next is the Property Pendulum. It's all about asking the hard questions when looking for a house. That's up next in the Fear and Greed playlist on your favourite podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you very much, Adam.
It's Thursday, the 14th of November, 2024. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, X, TikTok and Facebook. And please have a great day.